Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
Now, when it gets to these higher levels near 130, it actually found some resistance back here, and I wrote a breakout to the upside would lead to a new leg to the uptrend. But if it breaks out through the bottom, it's going to be a stage 3 top. And we don't know at this point what's going to happen. So back in November, I says, this is a big range, and you probably want to be really, really careful here because the dollar index at the same time was testing the 87 resistance. So I didn't want to do hedging the position with volatility being really, really high. I really didn't want to do some kind of a covered right strategy. I did want to do a covered right strategy because the volatility being high, that kind of made sense. So I'm kind of looking for at least sideways trading for a period of time, especially if the dollar index is hitting resistance, okay? And use the resistance from the dollar index to determine when and how to hedge a currency pair that doesn't have as much history. So it's one reason why I kind of chart the dollar index along with the pairs that really are just, building history because they're brand new. So it's a good combination. It's kind of helpful. And notice in February, we were still stuck inside this channel. And this gets to be expensive if you're just buying protection. So some kind of a strategy while you're up here and going range bound, 9 months here, maybe 3 months here, maybe I think altogether we went 6 months here or maybe even longer. As it was though, we actually did break out of this finally at the end, out of the symmetrical triangle, went back up and tested the highs. You heard about triple tops, that's rare, but we actually had a quadruple top. That usually happens again, guys, because there's still plenty of sellers at 130. That's the only reason you see this happen. And once the stage 3 top developed, now we're kind of looking for opportunities to short rallies here, somewhere between the 122 and 128 level if it wants to get back up there. And notice how it came right down to the origin of this big move here. This used to be, these pivot highs used to be resistance in the past and caught a little bit of a bounce here. If you take an examination inside some of these charts, you'll actually see that there was probably a nice little support area to buy a pullback to. You can't see it on a weekly chart, but remember, a daily candle has a different high, low, close, and bodies inside there, so always good idea to chart multiple charts. So we said back in February, looking just again for little type of trades that we could take. It looked like an ascending triangle. The buyers were still wanting to go higher. And as you can see from that prior chart, if you did take that trend line break from 125 to 130, that's not a bad little trade, especially on a daily type of chart. Not for a long-term currency trader, but for somebody that's more active, that's not a bad trade at all. And on our daily chart here, we actually had a symmetrical triangle inside of a symmetrical triangle from the weekly chart. So this is actually where our entry would have been on a break of our trend line. And again, if you made new highs, make sure you're taking profits on those kind of trades. The breakout happened at right when I did the last presentation. And as you saw, we managed to top out here at the 130 level again. And we made a new stage 3 top on a daily chart. And that's, again, where you went up, sideways, and down. And notice here, at the beginning of April, you actually had your first opportunity to short a rally into the origin of this big drop here. It doesn't happen often in the currency markets, but what's the worst that could happen if you got short here or you bought a put? The worst that could happen is you get taken out for a loss if you make a new high here. And as you can see, that was a pretty spectacular move from 130 down to 108, depending on where you got in. But we did come back down to the origin of the big move up here from back in October. So make sure that you take profits. And what can we do with something like this right now? A daily chart shows us kind of basing here going sideways. This is still some resistance above us here. So maybe you want to take a strategy and buy a breakout above 118. Once you clear this little resistance area here, the origin of the big drop, you really don't have a lot to stop you until you hit 122 because there's no basing here. You're just kind of, falling away really, really quick. Remember that slide I showed you that there's not a lot of accumulation of orders that you have to chew through? So price usually can move pretty quick once it breaks these resistance areas. And these will be targets above current price and possibly another opportunity to short this stage 3 top if price wants to go up there. So that's the plan for there for trading the Canadian. And again, if you use a 114 put just in case, or if you're doing this on some kind of a Forex chart or whatever, use a stop loss below 114 because you never know. Something could happen next week, this week. Dollar sentiment is all over the board. Our euro, really nice little breakout here out of that stage 2 or into a nice stage 2 down here. And our plan again was to buy 65 calls on the breakout or buy possibly 62.50 calls on the double bottom here, the retest of the bottom here. That was the strategy. Spectacular move. We hedged it for a while because of where it went and how far it went and how fast. But this one here, very interesting. We were looking for an extension of the range higher because the British pound had broken out that week. So premium writing strategies, if prices still want to move vertical, these don't make very much sense. So just a simple put at the bottom of the range. And remember, what you're trying to protect is a move from 65 up to 76, not a bad move. So at that point, you're looking for protection. And that was a pretty fast collapse too, okay? And really, about the only reason I could figure for it, we did have that dollar index resistance. Of course, the dollar did collapse, the dollar index itself. And now this becomes a stage 3 top, and any kind of a rally into these stage 3 tops becomes a shorting opportunity. And there we came down to the 68 level, and we found some support down here once before, and we kind of bounced again. And we bounced right back up into this resistance area here at the beginning of the year. All right, and I mentioned once option traders, of course, you got to be aware of support and resistance for other reasons too. When you buy call options and you're hitting resistance, this is where you're going to get that volatility crush plus your time decay. So if you're buying those calls when price is moving, you're overpaying for them, and the first thing that goes is the vol. And so that's something you never want to do if you possibly can avoid it. So knowing where these areas of support and resistance are key. Same thing if you're buying puts when prices are falling into a support level. And then notice on these next charts how many weeks it took for the euro to go higher and make a new high. This again is time decay, and this is going to kill you on your option position. So if you see one of these resistance areas, take your profits, okay? Don't fight it. And we actually did again top out here and started another stage 4 decline. And we kind of have not got back down to the 68 level here. We're sort of basing here. With some of the other currencies looking like they want to turn, maybe the euro is going to turn too. I'm going to probably advise you, if you want to take that kind of triangle breakout either one way or the other, you really don't have a lot of room to run on either trade. If you do get the breakout above 72 up to 76, that could be a nice little trade, but be careful again up here of going sideways. Just make sure if you're taking that trade, you're in and you're out. Don't hedge it because there's a chance you could come higher and then sell back off. And we could trade in ranges for a long time with this currency, just a lot bigger ones than usual. And so on a daily chart, you did break this trend line here just today. And resistance very, very close. If we would have broken to the opposite end, very nice support here at the 68 level. Notice how we tested that support one time and really bounced off like a ricochet, that V shape. So maybe the next time you come down there, you won't find quite as many buyers. Contrary to popular belief, the way I was always instructed, the more times you come down to these areas where there are buy orders, the more opportunities for buyers to buy. So instead of that support becoming stronger, a lot of times what happens is it becomes weaker, and eventually you fill the last buy order, and then price goes down looking for more buy orders. So don't go to the well too many times on these areas. It's probably the best way to mention this.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.